It's about to get worse for Bitcoin and probably even worser for the old cryptos there. As we do get into today's video, the downside setups that we have been looking at are starting to play out, and we are getting the question answered of which direction first, which it looks like the Band-Aid is about to be ripped off. So I do want to prepare for such activities and get into the actual price action analysis of the day. As always, we'll start it off with some daily price action statistics. We can see that Thursday is actually the most likely day to close negatively out of any weekday since this bull market began in 2023, with just over 56% of all Thursdays closing negatively in that time, which is indeed the most negative of all days. So negative. I feel so negative. We need some more positive vibes, perhaps. Anyways, we are most interested in, as always, the average percent gain and the average percent loss for any sort of Thursday, whether it be positive or negative. And in these cases, when we have seen positive closing Thursdays, that has given an average return of about 1.91%. And in that case, that would be a price of about $200, kind of close to today's high, a shade underneath that as of right now. And of course, on the other side, which it is already testing, in fact, we can see that 181 is the average loss for a Thursday. And that would put Bitcoin somewhere around 108, 100. We did already see that level bounced off of in the early morning hours. So again, if you are looking for that quick scalp play, it's already played out. The first pass has already happened. If you're looking for the second pass, just please understand it is extremely lower probability than the first pass. First pass, almost always a scalpable bounce. Second pass, not so much. And again, I think that this indicator is just, or the script is just, it's mind blowing to me at this point. Look, I'll just say it in a very, very blunt way. If you're a short-term time frame scalper, if you're like a daily scalper and you're looking for those, sort of quick opportunities, it's been right in your fucking face for, how long we've been going over this now? It's been like half a year to a year, perhaps. It is just about as simple as it gets. Again, these are not home run plays. These are scalping plays. I believe there was already an interaction this morning on that bottom boundary. So again, if you are looking for the second one, that's not the good play. But as we move onwards and forwards, just keep that in the back of your mind's eye, because that average return for today would again place us around about 108 or so. So if you do see a wick significantly further down intraday here, it's probably going to be a bounce attempt before end of day, drawing it closer to that average. Maybe not exactly to the average, but closer to that average. So perhaps another scalpable opportunity. But again, this indicator is available actually for free for 7 days in the link in the description below for Teachable. Just find your way over there to the Caretaker's Indicator Suite, and it will come again 7 days for free, and all of Caretaker's goods as well. The old goods. And on top of this, I want to follow up on one of the signals that we were following on yesterday and the day prior's video, and then of course relate that into the major setups that we have been referencing that are now, it seems to me quite obvious that they are playing out. So daily time frame over here, we did identify that there is a drive of hidden bearish divergence, also part of Caretaker's Indicator Suite, by the way. Good old RSI tool right there. A little bit more noob friendly, but we can see that a couple of major things are happening right here. So not only are you getting hidden bearish divergence, but you're also getting a lower high compared to the last local high, which was the 12th of October. Fucking fly in front of my face. Get out of there, you bastard. We are also getting what is a lower high on that green 55 EMA, which is also in the context of all major moving averages here in a bearish posturing, except for that 200 simple. It would be even more bearish if the 200 simple, the white moving average, was governing all of these other moving averages, meaning that it's above. But with this play right here already below that 200 simple, it is very much indicative of a real break very likely about to happen, if not already. So I do want to acknowledge that. I also want to bring up an indicator that I've been working on. It would be, I guess I'm just going to call it the crown oscillator. I really don't know what the fuck to name it, to be honest with you. It's still in developmental phase, but it is starting to show a more aggressive turn down right here for momentum and volatility, and volatility increasing while momentum does turn down once again at what would be the lowest trending fib. So I do look at this again as a real potential breakdown indication, and that's going to be mediated as we get into our other setups that we've been referencing. So the big one that I've been calling into is of course the 4-day setup over here for CME. This is a part of a combination of several other setups as well, but again, the simple setup here is that red moving average crossed into the underside of the yellow moving average. That's a 4 EMA versus the 21 EMA, and anytime that we've seen that cross under on a closing basis, there has been a minimum correction initiated down to that green moving average. Again, minimum correction every time in the past 8 years without any sort of like a major rally in between. Now, this is just CME, so this spans the whole history of CME. We can do this on spot as well. In fact, we will go over that a little bit later. But as of right now, this one already fired off back here. This was, I think, about a week ago. And that green 55 EMA is currently on CME around 102,700 or so. So, you know, very, 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 very likely that this is going to be the move that does bring things down around that region. At least that's the way I'm looking at it right now. That rejection that we saw yesterday and the day prior on a lower high at 116 is significant. And that does very likely, or it is very likely going to cancel out any sort of short-term upside setups that were potentially available. This is going to take precedence, and at least this very likely plays out first. Maybe the upside setups play out later. That's possible, I guess. But for right now, you know, the focus is on the short term, which, yeah, I do expect things to get some more downside here. On top of that, like I said, there is the 5-day setup as well. A couple of things right here. One, for spot price action, it's already fired off, and you know that the target for this one's actually significantly higher than what the 4-day CME one is. That would be about almost 105,000 US dollars. Again, that is a minimum target, so it can wick, you know, in some cases significantly below that. We have seen that in the more recent past right here, like you can see, and here, and here, and here, and here. And in some cases, like a lot down, you know, like 5-10% away from it can and does happen in certain circumstances. But what I want to get back to here with CME is that, you know, we've been following this setup or variations of this setup between the red and yellow moving average, getting that minimum correction down to the green moving average for like, it feels like maybe 3.5 months now, just going up over different time frames. And this is a really beautiful setup, not because, in my opinion, it's a tradable setup. It would be a very bad trading strategy, in my opinion. However, it is really, 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 really useful in just kind of getting an idea of whether, you know, correction is most likely to occur or not. And in this case, we can see that the 5-day time frame over here on CME is very likely also going to confirm the same cross. And why am I bringing this up? Because the target is a little bit lower. So you can see how one time frame bleeds into the next, and that bleeds into the next. We've been following basically the 12-day, the daily, the 2-day, the 3-day, the 4-day, now the 5-day, and we'll even go into the weekly as well. All kind of, you know, getting ticked off one after the other, which continues to give us a corrective bias at best, and perhaps, I mean, a toppy bias at worst. Obviously, I'm not necessarily of that opinion myself just yet, but I do think that there is sideways and downside here, as I've been saying for a while now. On top of this, like I said, the weekly time frame is very likely going to confirm the same sort of cross as well. That one's a smidgen lower than the 5-day as well. It's about $99,000, and I think spot price action has the same thing here as well. Indeed, it does. Basically, the same target here as well. So then the next time frame that we really be looking to would be the 10-day time frame, but that one's still kind of far off. So perhaps we got some time. But, you know, if that one crosses, then we got targets much lower, actually. But, of course, it's not there just yet, so it's a little bit too premature to be speaking about this. Let's just follow on the 5-day for now. And, yeah, you know, that would be having targets down. Let's just call it around $99,000. On top of that, I also want to acknowledge that a similar but slightly different setup is about to fire off over here as well. So this is just good confluence in this case. We're looking at the 2-day time frame. We're looking at the yellow and the green moving average. That's going to be the 21 versus the 55. Same idea here. When the lower period, the 21, the yellow one, crosses the inside of the green one, then that initiates a setup. And throughout the past 8 years, it has perfectly gotten down at least to that purple moving average. That's going to be the 200 EMA. And as of right now, that is, I mean, it's actually like pretty similar to the other one. So maybe this is kind of redundant here, but, you know, around $99,000. So, I just want to say that this is still a corrective period. I don't think that things are going to zoom on to new all-time highs anytime soon. I think that that's actually rather obvious now after yesterday's confirmation of that lower high rejection. Before that, there was certainly a potential. We did hit our 116 target with flying colors. However, any sort of, potential continuation from there is just not relevant in the short term before these downside targets play out. So that was one of the big questions that we've been kind of exploring on this channel now for a while. Anyways, let me get back to my notes over here. Just want to make sure that I'm hitting everything because it is indeed important. Okay, we got that. Yeah, so let's also remind ourselves that stochastic momentum on all higher term timeframes is still more or less indicative of correction at best. Let's just go down all of the higher term timeframes here. Again, keeping in mind that, no, sorry, not November, but October this month is going to end after Friday. You know, Friday closes the end of October. So that's that. Anyways, daily time frame here is actually going to show upwards momentum. But while this does put in a lower high, like this is, in my opinion, a bearish. This is bearish. That's a bearish reset by the fucking definition of it. 106,650 as it crawls up to the edge of the bearish control zone. I do expect this to turn back down in the next couple days. Yes, that's a little bit of, you know, coping and guessing and whatnot, but just seeing it too many fucking times, to be honest with you. 2-day time frame is going to also have a chance to cross the upside here, but it's at the same pivot, 106,700. That does mean the second that you see this thing come back down below 106,700 and close below there on a 2-day time frame, yeah, that's a really good confirmation that this thing wants to live in the bearish control zone for a while. 3-day time frame is going to continue to the downside here as well. That's 117 pivot. 5-day time frame is going to continue to the downside, also getting to the bearish control zone for the first time since, you know, March of this year, as long as Bitcoin's below 115. Weekly time frame is going to continue to the downside as long as Bitcoin's below 115 as well. So that number comes up a couple of times. 10-day time frame also going to continue to the downside from really critical levels here as long as Bitcoin's below 119.5. The bi-weekly time frame, which is not closing this week but closing next week, will continue to the downside as long as Bitcoin's below 119.200. Again, same corrective postures as all of the prior major corrections throughout this cycle. The monthly time frame, which is closing again tomorrow. So big fucking deal here, like really big fucking deal. I'm sorry to like be a little bit more intense on this one, but this, in my opinion, really does matter. Monthly time frame is going to see the momentum turn to the downside for the first time since June of this year, as long as Bitcoin's below 116. So barring a $8,000 rally from where things are at kind of right now, we're going to see that turn down in the critical zone on bearish divergence. Like, I'll just lay it out really fucking flat like this. Look, I do think that there is potential that, you know, top is in for like a very, 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 very long time. Personally, I'm still playing it more on the conservative side, meaning that, well, I do think that there's sideways and downside. I'm just unwilling to say that, hey, you know, highs are in for forever. I'm just downside angled for now. All bounces are just that, bounces until proven otherwise. And then the bi-monthly time frame, which is also going to be closing tomorrow. So we got the monthly and bi-monthly. So the two highest term time frames closing tomorrow are very likely both going to turn down. And I think that the 2-month time frame is actually very concerning here. Again, to be very, very blunt, the current pivot is 113,350. It's not impossible for Bitcoin to have a $5,000 rally between now and the end of Friday. But assuming that we do not see that, we're going to see the first cross to the downside since July of 2021. And the one before that was all the way over here in November of 2017. And the one before that was all the way over here in January of 2014. Now, if you know your Bitcoin history, you know where all of these are going to be coming in around, but I will just make it extremely fucking obvious for anyone who has any doubts in this case. Let's just go over these major ones right here. Boom, boom, boom. These are the past ones, and perhaps the future one happening in just a couple days, couple of very short days. And what do you fucking know? On the high, close to the high. These are not good signals. So while I do personally still have some hopium, because I want to see like an actual downtrend emerge first, don't get it twisted. Like, I am looking for downside from here, and I still think at best, you know, we're going to be waiting a long time. You know, if Bitcoin's going to shape itself up and put in another higher low, hopefully in the mid to upper 90s, I think that's a little bit more of an optimistic view of things, especially as long as, you know, this momentum is continuing to the downside. You know, I do think that it's possible to come maybe even to the upper 80s and put in a higher low. I think that would still be the bullish view of this. But, you know, long term, and just to like get one thing out of the way, I will start to adopt a, you know, macro high in if and when Bitcoin does come back down below those April lows. Now that's very, very far away right now. And many people are probably calling a macro top already right here. And I think that that's completely valid if you want to live that way. You know, if you want to be a homosexual, just kidding. There's nothing wrong with that. Of course, we're very accepting here naturally. But the point that I'm trying to make is that there actually is really good reason to believe that. So I don't want to be talking down to these sort of people because, look, if you believe in the 4-year cycle, early October should be your high. That should be your high. If you believe in the 4-year cycle as still valid, then you should. I don't want to say like you should because it sounds so fucking preachy, but your natural conclusion should be, yeah, that was the high. It was right on time. it, it made a slightly new ultimate at 126. Not bad, pretty good gains for the cycle. It's going to be lower than the prior cycle, but hey, that's what we expect. Again, for a maturing asset. So yeah, I don't have any major issue with that. I think that anyone who thinks that right now, you do have a real case to support that. But personally, I'm just looking for sideways and down until, and if it takes out this low over here from April, sure, I'll be macro bearish, saying, hey, this thing's done for like a year or two or whatever it ends up being. But until then, I just want to be open to the possibility of it continuing with the overall trend with perhaps a higher low somewhere, in this area right here. Anyways, moving on from there, of course, we have the HPDR. This one getting a perfect rejection right at the median once again. Not a good sign. Does imply that the bottom side of the range in the short term will be around 103,500, which does align with one of our setups from, I believe it was the 4-day CME setup over here, or over here actually. And of course, that's going to, evolve coming into next week's open. But just keep an eye on that one because I do expect these ranges to shift a lot, and that should give some pretty good indication as to what the new sort of weekly range will be coming into next week. But for right now, it's just, it does look like it wants to actually try for a real move to the downside there. On top of that, what else do we have? That's pretty much it for me, actually. We can go take a quick look at the quantum wave bands. I just want to acknowledge, again, for the people who are in this, just understand that it is always about the long-term results when you are following a long-term tested strategy. And in this case, it did just take another loss yesterday. Of course, it's going to happen after making new ultimas on the equity curve, I should add as well. But that's going to be the name of the game. And I just want to say for all the people, or for the people who are in this, make sure that when if you're not having this automated, if you haven't automated this, make sure that when it tells you to exit, fucking exit, because it's telling you to exit for a reason, because things are likely to get worse. They're likely to get worse. So if you're not going to play it in the way that it's presented here, definitely don't expect these results right here, because that is how this is being derived. So, keep that in mind. Again, for the more advanced people who are looking for automation tools and also automated backtesting tools, just to, really expedite the whole fucking backtesting process, which is a massive, 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 massive improvement in quality of life. Quant Prime over here is going to be the tool that I would strongly suggest. It's massively changed my life. I really only trade the higher term timeframes now, but it is all just automated with this. So it just makes it super, super easy. We do have a whole massive library of strategies that you can try out, whether you're, more of a short-term timeframe trader or a higher-term timeframe trader. You can reference the quant library right there. Again, this, just like the quantum wave bands over here, do have 7-day free trials. So we got some for the newbies, we got some for the more advanced people. We really want to be offering the best tools to make people more and more and more capable, and just maximizing your time at the end of the day, because it's one of the biggest fucking pits in trading is just backtesting your damn strategy, because more often than not, whenever you try a new strategy, it's not going to work. It's hard to find a good strategy. So that definitely helps in that regard. Anyways, I'll knock it off on that note. We'll be back on tomorrow with another live stream analysis. Other than that, I want to wish you the best as always. Just kind of a long way of saying it looks like our downside setups are gonna take precedence here. In my opinion, that's a good thing. It's going to rip off that band-aid first rather than later on, and we shall see where the dust settles. Hopefully by the end of tomorrow, once we get that next monthly and bi-monthly closure, which will help formulate the buys for the next month or two to come. Anyways, other than that, like I said, as always, wish you the best. Take care, much love, and see you hopefully next time.